Hey everybody, welcome to your weekly mortgage rate market report. I have some big news today. Today's a big day in addition to being my lovely wife's birthday. Happy birthday, baby. Actually, who am I kidding? She's not watching this. But today has been a culmination of many events that have been stories in the making for the last several weeks, if not months. I blogged about it earlier this week, and things are starting to come to a head today. Unfortunately, a lot of these storylines are not translating to lower mortgage rates. The Feds had a press conference yesterday, didn't really move the markets much because they did what the market was expecting. Today, however, we've had more rumblings of a trade deal coming together between the U.S. and Chinese officials. Nothing's in writing, nothing's official, but the market is expecting and hoping it to take place. So we've hit some new thresholds today that we haven't seen in the fourth quarter of 2019, and again, none of these things are translating to lower rates. Let me show you what we've got here historically. This graph everyone should be familiar with if you've been following along over the last 6 or 7 weeks. I started my bold prediction on August 17th. Right here, this is where rates were at, and they've been pretty choppy for the last couple of months, with the exception of 2 really good days on Halloween and just last week, actually, December 3rd. Things were more worse than good, and recently today we've hit this dotted line here for the first time in the fourth quarter, and you can see since earlier this summer when things were really in a free fall, we haven't been at this level too many times. Now, does this mean we're going to bounce back and see rates come down? Honestly, I think that's only going to happen now if the market has to shift expectations yet again on this trade deal. So for a number of you who are continuing to float rates, go ahead and give me a call or a text, and I'll update you on what your numbers and options are looking like if you're thinking that things are going to go from bad to worse. And you're done riding this roller coaster, we might want to try and lock something in. However, if your transaction was something out of opportunity, not out of necessity, then I say you continue to float and see what happens with the market. There are still uncertainties out there in the market if something unravels with this trade deal, which has happened several times. This trade war is not a new thing. It's been going on for almost 2 years now, and nothing has gone from agreement in principle to on paper. This might just be another latest episode of that ebb and flow. The British election results are supposed to come in later today. Remember, they're 9 hours ahead of us, but the election was today. The expectation is that the dominant party who wants a quick Brexit is going to win not just the prime minister position, but a majority in their parliament or their Congress to hopefully affect that to happen. But again, the world's an uncertain place, and the rates are along for the ride as we are. Give me a call if you want to chat one-on-one on how things are looking for you, but in general, things are not looking great for a lot of floating clients right now. So please give me a call if that is of concern to you, and that you want to lock something in before rates might continue to be on their upward trend. Thanks, everybody. We'll be in touch. Bye-bye.